So let's get down to business. I'm just trying to lay an outline of what you're trying to achieve and what we're going to illustrate. So we're really giving an insight into what a 12-week mentoring program will feel like. This is when you come up with a funded account and we have 12 weeks of trading. We're outlining the processes that build that professional framework, enabling sustainable profitability. You know, when you think about the mentors, when you've been successful in a career for over 20 years, it means you're doing the right things in bull markets, bear markets, low vol, high vol, and side markets. That's what you're going to learn how to do. Okay, the fundamentals stay the same. The application changes all the time. Okay. We need a macro bias, and Ross will be very soon showing you a presentation on a macro update. We need to have a bias. This is a top-down view. We're also going to teach you how to be a fundamental stock picker. You're going to do all the work. There are no shortcuts. You're going to pick stocks that are comprehensive and also consistent with your macro bias. This is the bottom-up approach, and we have to marry the two. Bottom-up fundamental stock picking is what we do, but it has to be cognizant of the powers in the market, the macro themes, and most importantly, it has to be within an acceptable risk level. We're trying to give you a process, a money-making machine. You need to think of trading as a business. First rule of making a lot of money is not losing a lot of money. There's no point thinking that you're going to get rich from trading because you call the market right. You think the market's going up, you're long. You think the market's going down, you're short. If you have this mindset, you always keep the door open to getting carried out on the stretcher, having a big drawdown, full of remorse, a long way to build back. It's not about trying to make 100% in a month. You can do, but a lot of things have got to go right. And you don't want to be trading like that when it's all on the line. It's unsustainable. So everything we do, all the different elements we're going to talk about, come together as a whole package. None are optional extras. Everything is necessary. This is how you have market-beating, sustainable returns on a risk-adjusted basis. And you'll start to understand that more and more as we go through. So the macro, basically an understanding of the yield curve, its implications for inflation and growth, relevant economic data, okay, and relevant leading indicators. So obviously relevant economic data is backward looking. So we've just had a GDP print yesterday, supposed to be 7, came in at 6.9. How important is that for Q4 last year? Well, it looks like everything was fine. It's pretty irrelevant. A war in Europe's broken out. We're more concerned about what's the next 3-month print going to be? Where's it going from now? So it's useful. We need to understand past data to give us an understanding of the current market. Leading indicators are often more telling. And what we're ultimately trying to do is predict the future. Okay, we need to understand the past, but we're very much forward-looking. Idea generation, the cornerstone of your returns. We're going to extensively cover trade idea generation. Anthony will be on tomorrow going through a detailed long idea. Ross will be back on Monday and he'll be doing a comprehensive short idea. It's not about whether you agree or disagree, but I'm sure there'll be very good ideas. It's about understanding that they're showing you a trade template, the steps. It's systematic, step-by-step analysis, and bare minimum. It's not about saying, I like the market, this stock's doing okay, the quants look okay, I know what it does, I'll buy it and hope the market goes up. We're not trying to trade beta, we're trying to trade alpha. So you need a trade template, you need a systematic approach. We're also going to cover the following disciplines that are part of that process. You've come up with the ideas. We need to optimally structure our trades. A trade structure is just an expression of what your view of the stock will be. We are leveraging our returns, not leveraging our capital. It's a big advantage of trading options over trading stock and CFD stroke margin trading. Raj is obviously going to structure some trades. He's going to structure your trades later on in the program. He'll do an introductory options pricing webinar next week. Ben will be in the house on Wednesday. He's going to be looking at technicals and price action analysis. This is important when it comes to market timing. We're a fundamental house, not a technical house. That doesn't mean technicals don't have a part to play, but it's very much a confirming aspect rather than the primary reason for your trade. You've got to know how to execute. I'm going to do a little presentation highlighting the silent tax of poor execution. You need to know how to construct a portfolio, embracing your specific stock risk within the protection of diversification. And of course, portfolio management. Now, this is really what the mentoring program does. This is when you're trading a live market, news is coming out every other day, conditions change. You start off with your fundamental ideas, suiting the market today with a prediction for the few months ahead. Things change. We're constantly mutating our fully invested book with one bias into another bias, preemptive and risk management. And that is best learned by doing it for real. So, we're going to move fast. We've got a lot to get through. We understand people are at different stages of their journey, but everything here is applicable to everyone, okay? You've got to generate the ideas, and there simply are no shortcuts. You're going to send your long and short trade ideas to this address, so make a note of that. I've told you what we are. What are we not? We're not a tip service. We're a school. Okay, we're not telling you what to buy, when to buy it. Copy trading is not the path to riches. If you don't know why you're buying it, how on earth are you going to know how to trade it? You're not going to know when to book your profits. You're certainly not going to know how to trade it if it starts to go wrong, because you don't know what the triggers are or the catalysts are. You'll just trade your P&L. It'll go wrong and you won't know what to do, and you'll be panicking. You'll be worried you're going to lose everything, and you'll probably sell it near the lows. Okay? We're not going to give you a view on Bitcoin or any specific positions. All the questions now need to be on today's topics. Okay? So this is what we're doing. So I'll be your host every day. You can see the topics I'll be covering. Ross is about to kick off with the macro. So we're going to have the rotating mentors through. Ross will be on 3 times, as will Anthony. Raj a couple of times. Anton will be with me when we wrap it up, and Ben's going to do the technical analysis. Theory versus reality. We think the sweet spot is 1 to 3 months. You need diversification, capital preservation, and absolute returns. Your process is your process. You need to filter out all the rubbish, all the clickbait, all the, gosh, the yield curve's just inverted, so we must have a recession, all the current themes in the reporting. By all means, read them if you have time. But by the end of this 10-session war room, your whole process should be focused, with you very much more in control. The power's in your hands. It's not about getting the right tip sheets, or do you get a Wall Street Journal or Financial Times subscription. Okay, far from it. And the more you understand that, the more you come to that conclusion, the more you're on your way.